Alrighty, traders, good afternoon. Oh, hold on. Let's get the mic up. Alright. There we go. Alright, there we go. Alright, traders, good afternoon, good morning, good evening, and welcome to the AAA session here. My name is Gary Fichardt, also known as the FX Big Dog and the Currency King. And I've got Chris and Tyson once again today as we go ahead and take a look at the market setups, opportunities that are happening this week. We know we have the inauguration taking place on Wednesday. We have some data coming out. We've got some rate decisions. We've got some job numbers. A lot of stuff that's coming out this week that we can go ahead and pay attention to. So let's go ahead and get into it. Before we get started, let's go ahead and get the legal stuff out of the way, and then we'll go into the details. So check you back. I'll see you back in about a few seconds. Alrighty, well, welcome back. And so let me go ahead and introduce the panel for today. It's Chris and Tyson. So let's go ahead and pull the team up. Chris and Tyson, good afternoon to you guys, and welcome to the session. Don't forget to unmute your mics, like I forgot to put on my mic. So, Chris, go ahead and say hi to everyone, bud.
Hey everybody, happy Monday. Welcome to the Ask an Analyst session. Happy to be here. Very busy week, so we expect some good volatility, expect some decent movement, and actually have a lot of good profits that are running right now, so I want to make sure that we're protecting those going into this week. 3 rate decisions plus an inauguration, other news. So a very busy FX calendar, and I'm sure everyone watching the stock market as well, like I am. So looking forward to another great and busy trading week to kick things off.
In fact, on that subject, put a note, put a pin there. We're going to go talk about protecting your positions, like Chris just mentioned right here, because I have some stuff I want to share as well. I want to actually have a debate on that, Chris, because I want to see your views and as well as Tyson on that. Tyson, how's it going this afternoon?
It's going good. It's going good. It's good to see everybody. I'm also known as Ty the Trader or Tyson the Joker, because we got the Currency King, we got the Currency Master, and then the Joker here. So anyway, it's good to see everyone. We do have an amazing week. In fact, I've got $5 pairs that did something last week we've been talking about. Only 2 haven't, and we want to talk about that today.
Nice.
Excellent. Well, you know what, Tyson, you've just got me excited about what you just said right now. So let's jump straight into what you just said right here. What are you talking about? Come on, man.
Yeah, it's easy. Pull up a chart. Remember what we've been talking about. I said the trade is easy rolling into this year. You take the prior week's lows, as an example, the euro dollar. Take the prior week's lows,
okay,
and simply look to sell on a close below a prior week low. And the currency pairs that did that, so for looking for dollar strength, the euro dollar had a close last Monday below the prior week. The New Zealand dollar had a close below the prior week low. The pound dollar, the dollar Swiss, and the dollar yen, both of those had a close above a prior week high. So we're starting to see, in my opinion, this is a very clear sign of a shift in the momentum and a shift in the battle, because that's really what's going on. We've got a battle happening at all times, and who is winning the battle? The bulls were losing the battle. The bears were coming in and beating the dollar up, and now we're starting to get a little bit of a shift, and that shift may just be because it's obviously some profit taking and all of that. But I do see some nice downside momentum. There's only 2 of the dollar pairs that have not put this pattern in yet. And that is the dollar CAD has not yet closed above a prior week high, but it's getting close. And the Aussie dollar has not yet closed below a prior week low. However, the Aussie dollar is actually flirting with it today. So I love the looks of what we're seeing. However, what I see is this. I think a lot of them have experienced some weakness. We're due for a small retracement back. As an example, in the euro dollar, I like selling around 21.40. If we get back up to there, and then looking to sell back down, I think we're going to head down towards this 118 level.
Now let's dig into a lot more detail. You know, I like the information, but I like to look on the chart and actually break it down piece by piece. So let's talk about Let's talk about the euro dollar right here.
So,
So
first,
are you
Gary, real quick, before, just so people can kind of visualize what I meant by a close below, put on the, if you could, can you put on the weekly encapsulation?
Oh yeah, I
Keep
can do
on the
that.
daily, and then put on just the weekly encapsulation, just to show. On Monday, you can see last Monday we had that daily close below the prior week's low, and that was kind of my area. That was when we were talking, and that was kind of my area of like, hey, if we close below that, guys, look for continued weakness.
Okay, so you're talking about this candle right here, the daily
Yes.
candle closed below that low right here.
Exactly.
This is indicating price is going to move south.
Yep, and that was the first close below a prior week low, Gary, for I believe it was like 9 to 10 weeks, and so that was a big deal.
Okay. Yeah, because there was the low right here of the week. There was the low of the week. Here was the low of the week, and so this has been a rally.
Go back, and even when it popped below, even that week right there, it never closed below.
Right, never closed below. You're right. So yeah, it's been a big deal. But hold on a second, Tyson. So I get this part right where you say that price is now traded below the weekly. And we close below the weekly lows right here. So what is your projection as to what the dollar's going to do, the euro dollar's going to do right now for the next, let's say, 2 weeks?
Phenomenal question. So I will take it just a little bit more granular than that. I'm going to say the next 2 to 4 days. I believe we're going to get a rally back up towards the 122, 121.50, 122 area. We're going to create kind of a right tip of potentially a crown or head and shoulders pattern, and then that's going to cause that next push down. And I see that push down taking us from, let's say, 121.50 down to 118.
So 121.50 down to, so let me do that again. So we're looking at 121.50, which is right about here, this level right here. So you're saying we're going to see it already up here.
I need to make sure that Chris jumps in here because last week I talked a lot. I want to make sure I don't do the same this week.
Oh, we're gonna give Chris time, and all we need to do is tell Chris you got 1 minute, and he's gonna take 10 minutes. You know that, right? So, all right. So we're gonna go ahead and move down right here. Okay, so we're gonna move down. Which level are you looking at targeting?
So I'm ultimately looking. I actually think we could get to around 115, but we're not going to just get there in a straight line. I think the first move is going to take us down to 118, 118.50. Kind of that breakout area. We had a level of consolidation or kind of a level of resistance. I think that area is going to play as the next level of support, but we're going to push down there.
Okay. All right. Chris, you want to add to that?
I mean, all the levels look great. I would actually love to see pullbacks on some of these dollar movements. We've been waiting, obviously, a long time for dollar trends and dollar strength. I think we did a great job calling some dollar strength early in the year. It took about a week or so to have these things take off. Nice, clean trend line breaks across the board. Euro dollar, dollar Swiss, dollar CAD. Pound dollar is not really behaving. Not that I'm super short on pound dollar yet until we have better confirmation. But the fact that we've had the euro dollar drop from, let's say 23.50 down towards 20.50, I mean, that's a 300 pip correction. That's not nothing. So, I mean, any type of, like Tyson said, about 100 pip or so pullback looks fantastic for equal highs or hit the backside of the trend line looking for shorts. So I still like the move. It's probably going to happen faster this week, so be prepared for higher volatility. Like I said, I am protecting some profits right now. I actually started to build some early dollar positions. I added to some of my trades. So my euro dollar, I was adding some sell stop levels. So I was in some trades. I want to protect them. If we get pullbacks, I'm going to reload. It could be around 2,200, could be up towards the highs at 2,350. But I like this overall large range. Gary, if you want to go to like the dollar index as an example, we are not necessarily calling the bottom on the dollar index. If you look at something like the weekly chart, I mean, we could go back to the lows of 2016. We could go into those lows in 2018. We are at the lows, in 2016. We're at the breakout point of 2018, but we could fall into those choppy lows in January, February 2018, and that's the equivalent of that euro dollar, 24 to 2,500 range. So we may not see like the floor, the bottom in the euro dollar or the dollar index, But if we get there, one more push lower, that kind of extra bold divergence on the dollar, it's interesting that we've seen so many cases out there fundamentally, big institutions and investment banks talking about, the overall weakness in the dollar and why we're painting a bearish trend. And yet we're starting to see that kind of sentiment turn where everyone that's been short dollar is now either profit taking or starting to, get themselves out. We could have some squeezes going on with dollar strength in the interim, but it's interesting. Like, this goes back to what we said, last week and the week before, starting out this year. This whole thing about dollar weakness becoming, in our opinion right now, dollar strength is buy the rumor, sell the fact. A lot of things got priced into dollar weakness. A lot of things got priced into stock markets making new highs, and we are painting some interesting correlations. Like, dollar strength on the horizon will probably not mean a higher stock market. So I'm prepared for that kind of, balance of, if we're going to see a stronger dollar, we're going to see either choppiness in the stock market, or we're going to see, maybe some quick selling off, a little corrective phase in stocks for at least the time being. And it could be short-lived. I mean, we've already calculated the yearly pivots at 14 to 16% correction levels on the S&P, the Dow Jones, and the NASDAQ. So if we're going to see even reasonable corrections off of, 50 to 60% rallies from last year's low to high, there's certainly room for a little bit of correction in stocks. There's room for the dollar to get stronger in the interim. But again, I like the technical pairs. I know we have a lot of news to digest this week. That doesn't mean it's going to help us. I'm just saying be ready for volatility. Things might move a little bit faster this week. The inauguration, for example, there's not really a timestamp on how the market's going to move, but I would expect the meat of this week, Tuesday, Wednesday, Thursday, decent flows and decent volatility. If you're following things like the currency strength charts, expect those vertical levels to be higher. We've seen really tight ranges, really low day-to-day volatility. I would hope to think that things like that can break through this week.
Hey, can I ask a quick question to both of you, actually, because I think it's so important long term. So I agree with everything you're saying. The one thing that I kind of take a step back on is money supply. There's a couple things happening right now. The amount of money supply in the system is just amazingly huge, and it's amazingly huge all over the world. And the savings rates for the average person is actually starting to skyrocket again. So we've got a combination of. So I built this bullish case in my trading room 2 weeks ago, and I said, hey, we've got money supply skyrocketing, we've got savings rates going up, and we've got the overall sentiment within the market has actually, and this is reflected in the volatility index being at 23, it's actually historically higher than normal. So we've got kind of a conservative mindset or a kind of a pessimistic mindset happening with a bunch of money on the sidelines. So what I'm saying is I actually love the idea of taking advantage of some dollar strength in the short term, but I see the next multi-year move being a true inflationary move. And I'm talking buying, and this is completely opposite of what I've been saying for the last 12 years. I've been a deflation, stagnation type of person. I've been kind of right on that. But man, I am now seeing the makeup of this massive inflationary move happening. And so I am not ready to be a long-term bear on the market. I'm not ready to be a long-term bull on the dollar. I am ready to be a long-term bull on silver, on cryptos, and even on risk assets such as real estate and maybe even the stock market, because money has to go someplace. What are you guys' thoughts on that?
I agree. I mean, that's probably been the biggest challenge for most investors over the last 12 to 24 months is, I mean, last year we essentially made it money so readily available that where's it going to go? I mean, you got to do something with it. You've slashed rates to nothing. You've slashed savings to nothing. I mean, it's forcing any type of investments to go into riskier plays. Cryptos this year. Actually, Tyson, I think we'll have a conversation on this outside of a AAA. Read or heard an interesting interview this weekend with Jim Rickards, who kind of painted a very bubbly picture of cryptos in general, and he thinks it's all a farce. And it's like, again, I say that there are enthusiasts and there are haters, and somebody figures out where they are on the spectrum, but you can't deny
we're in
that
bubble
there's
territory for sure. We're
right. But he's talking about
times overvalued right now.
Yeah, he's saying that basically when it overstretches mining costs and it just becomes like, you have players that just kind of push the volumes around and push the prices up and force these speculative moves. But when it stretches 2 to 3 times mining costs, it's going to come back. It did before, probably will again. Mining costs right now, Tyson, is it true right around 16,000? Is that about
exactly
right
for
Bitcoin?
Exactly where it's at. And historically, I keep telling my students that if maybe this time's different. It's not, though. It's not. We don't have a huge – that's the problem with crypto, though. We don't have a huge history of crypto.
Right.
We're only going back to 2012, 2013 tracking this stuff. But it always – in 2017, it got 2.5 times above mining cost. It got about 2 times 2 plus some above mining cost this time. That's about the top, guys, and we're going to see a pullback, which, again, long-term. Buying at 35,000, I think, is a steal.
Sure.
Is it a steal over the next 3 to 6 months? I don't think so.
Right. And I'd love to see. I mean, I'd love to see a rebalance to 20,000. I think between 20 and 16, if we get a even a dip or a V bottom down there, I think there's. I'm
on record, and I'll say this, and trust me, in the regulatory environment we're in, I'm going to have to do this. So now I'm going to be on record. I want to buy 5 to 8 full Bitcoin between 15 and 20,000. I'll do it live in front of people.
Nice.
So I'm excited to do. I'm excited. I'm waiting. So.
Okay, well, I'm going to say this. Yeah, long-term, I think long-term Bitcoin, definitely bullish on long-term Bitcoin. And yes, with some short-term dips. The same thing, the real estate market. I think we're going to get some short-term dips on the real estate market. So real estate, I'm thinking I'm going to be short-term bearish on the real estate. I think I'm going to be short-term bullish on the dollar, but I think with all the printing of money that we currently are projecting to do, especially with all the executive orders that are going to come through, I think midterm bearish on the dollar. Definitely midterm bearish on the dollar. I want to come back to your discussion around the Euro US dollar and how it links up with the dollar index. Let's go to the chart quickly because I want to go ahead and pull that up right here as well. The one thing that I'm liking about the Euro US dollar right here is the fact, and I like your speculation on this, Tyson. Looking at short-term dollar rally, and if we take a look and see how the market set up from a technical perspective, we did go ahead and complete a low. We took out that low, which ultimately was a fourth wave cycle or fourth wave low right here. So we took out the fourth wave low. So a little bit of retracement back up again for another dip to the downside. I'm absolutely on board on that. And I'm looking for that 115, 114 level because of, and I think we spoke about it last week, this is the major fourth wave low after the market had come up to a fifth wave completion right here. So this is ultimately we've seen the midterm target. So midterm and then rally. If we get a rally in the euro, that means there's going to be weakness out in the dollar. So this is why I'm saying midterm, short to midterm sell-off on the euro. That's going to be mid to short-term rally on the dollar. And then long-term, I think dollar's going to fall. The dollar's going to be weak. And then I'm also going to be a short-term rally on the stock market, but mid to long-term bearish on the stock market. Well, I can't say bearish long-term, but mid-term bearish on the stock market because I think we're going to see a fall. I think we're going to, just like you guys say, I think we're bubbling up, and I think that bubble's going to pop, and we're going to see another 2018 scenario. 2008 scenario.
Though, I think you're right, but I think there's really gold and there's gems in the market that if you allocate. So if you think about the who's in power and the kind of the secular trends that are going to happen, battery technology, environmentally friendly type of stocks, crypto, anything mobile, anything entertainment, I think is going to have I think we have much higher to go on stocks like that. Overall, the market could fall, but I think there's some stocks out there, if you're nimble enough to play around, that could really do well.
Yeah, I think it's sorry, Gary. I was just going to add to Tyson's thoughts. I mean, I think you either look at buying great companies on sale if we have any pullbacks, or you look at the companies that were just beat down so badly last year, and those would be like the kind of the cigar butts, as Buffett's always called them. Like those could be like the value stocks that start to rebound. I mean, I actually just bought AMC, the movie theater group, right? Like AMC Holdings. It was $2. I'm like, look, I've got a very little downside if movie theaters ever come back in the next 12 to 24 months. And look, I haven't been to a movie theater in probably 2 years. I know that it's kind of a one and done trade, but if we have something like, I mean, GameStop was going broke, and all of a sudden Chewy CEO joins the team, and all of a sudden GameStop's like, hey, maybe video games have done well, so this guy steps in and can change their structure, give them a more e-commerce presence. So if AMC does the same thing, maybe it goes from $2 to $4, $2 to $6. Airlines, I mean, American Airlines, still I think a much better looking price than Delta. Delta actually recovered quite nicely, but airlines, again, if travel starts to rebound and screening starts to increase, you're going to see value stocks that were beaten down and they were just lagging from everything else starting to catch up. And, we might see some sideways movement. Amazon's looking to form a union in Alabama. So, you might see some sideways movement. We have some tech stocks that are forming some head and shoulders. So, again, buy great companies. I think a strong e-commerce footprint. I think green technology, like Tyson was saying, I know you've had a lot of SPACs on those battery companies, and that's a sector that I think is going to be huge over the next 2 to 5 years. But this to me, like 2021 feels different than 2020. I feel like now 2020 was like the anomaly year. If you bought anything, you made money. 2021 is going to be, you're going to have to find some gems. You're going to have to do some research. You're going to have to, play the game, learn how to trade, versus like everything's going. I think directional options were very lucky last year. Essentially, if you bought call options, you made a ton of money. But I just don't think we're going to have just a flat out repeat with as much as kind of all the optimism is kind of being priced in. We can drift higher. We can see a reluctance to go, super bearish on the markets, but I think we're really overstretched at these current levels.
So I want to get back to the currency real quick, Gary, but I got to say, just because Chris just mentioned something amazing. I think this AMC trade, first of all, I think the reopen trade is great, but AMC has a short float of 36.5%. That is screaming a short squeeze, my friends. Yep. At this triple bottom, double bottom level with the 36% short float, holy smokes, that thing could pop to $6, $7, $8, $10 real fast.
Yep.
Okay, so let's focus on what I'd like to focus on. We get together on a week-to-week basis, right? And we can look at the outlook, and it's all speculation because think about it. 6 months from now will all be dependent on what happens from week to week, month to month over the next 6 months. So everything can change. What we're speculating, what we can see happening from now to 6 months from now, may be different over the next couple of months as we go forth. So let's take a look and focus on what's this week going to do for us this week. What should we be focusing in on this week? And I'm going to give Tyson and Chris some more time on this to go ahead and talk about what are you focusing on this week, and let's get to more specifics about trading opportunity. If it's just 1 or 2 trades, if it's just overall the directional bias on a certain basket, whatever that is. What is your focus, Tyson? I'm going to give you a shoot right now. What are you focused on this week with regards to trading?
Yeah, I'm going to keep it real short and sweet. I'm looking for short-term strength in the next day or two in pairs against the dollar. So short-term weakness, the dollar, but I'm going to take advantage of those opportunities to then sell the euro dollar, sell the New Zealand dollar, sell the Aussie dollar. Also, I think strength in the yen. So the dollar and the yen are fairly correlated. I think as we see strength come into the dollar, I think we'll also see strength come into the yen. So I like the next few days, maybe take a little bit of a breather, see how the next day or two plays out. As the euro dollar rallies up, maybe 50, 60, 100 pips, look for those opportunities to sell back down.
Okay, Chris?
Yep. So I did some protection. I closed out for about 500 pips of profit earlier, like last night, this morning. I am looking to reload essentially. I wanted to protect. That's a nice little chunk. I'm going to do the same thing, looking to reload on, pullbacks and fades on the euro dollar. Aussie dollar, I think, is still kind of, lingering towards those highs. So I'm just going to hold as is. New Zealand dollar started to drop a little bit. I'm liking, kind of one pullback, one little, hesitation, retracement. I'll look to sell that and short it again. Dollar CAD, dollar Swiss, I'm going to hold. I like dollar Swiss. I know Tyson's got a big level at like 1.00. I would love to see dollar Swiss at least in the near term get back to like, 92, 9,300. That's a great window for me. Dollar CAD, I think we have a really easy area to start looking for confirmations and trade it up towards 1.30. Again, pretty conservative levels, but dollar CAD has good amounts of space for it. Dollar Swiss, I'm holding. Euro dollar is kind of in its own little island right now, but any pullbacks, I like that short at 2,200 to 2,300. Looking to sell it back down towards 1.20 and 1.18 are lower. So the dollar still looks great. I just wanted to protect and bank some profits and look to reload. And then elsewhere, thoughts on some other currency pairs that are not dollar related. Aussie New Zealand went up to our level around 10800, so traders have been protecting profits with me between 10750 10800. I'm really interested in something like Euro Aussie, Euro New Zealand. If and when we see some turning points, if and when we see some bottoms on Euro Aussie, Euro New Zealand, I think those as well offer some really big upside potential. In fact, technically, I kind of like the Euro Aussie, Euro New Zealand better than Pound Aussie, Pound New Zealand at this time. I think those are cleaner trades. I think they've had a more severe trend from last year to wrap up and push down. So I really like getting some turns on Euro Aussie and Euro New Zealand, looking for maybe a 300 to 500 pip retracement, or even bottoms in, and starting to see some really good trades going bullish on those pairs. But again, trend lines are going to be really important because they have drifted. I mean, I'm staring at my Euro Aussie right now. Highs around 68, lows around 57. I mean, we're 1,200 pips off of essentially the high from October of last year, and it's been nothing but a downtrend. So getting some good price actions, towards the bottoms. If I'm looking at levels, I told traders this last week, 5,300 is a fantastic level just to test. So I do have some very small positions in Euro Aussie right now, and I've went ahead and I'm like, look, if there's a line that I'm looking to buy at and really start to build a base, 1.5300. I love that area on Euro Aussie if we hit it, and I would look for that to turn to maybe 1.60. So we could have some big range levels trading out on Euro Aussie and Euro New Zealand over the next maybe really, depending on if we hit those levels this week. I'm going to start buying like 5,400, 5,300 on Euro Aussie, New Zealand, Euro New Zealand. If we get down to like 6,500, 6,200, same thing. I'm going to start buying those areas. I like both of those currency pairs a lot.
I think Chris, you missed 4 pairs out of the 28. Do you want to just continue with those 4 pairs? I'm
still long Euro Swiss, and I'm still I actually have, so in my room we're probably in like 12 or 14 currency pairs right now. So we have essentially we have our fingers in a lot of different setups, testing the areas, building some positions, which I like to do, and those become big profit injections, which I'm happy with. Others are just kind of waiting and nurturing some highs and lows and waiting for better confirmation. So, but again, it's a brand new year, so we are active, we are testing, we're trading really small, and kind of making sure we get the right evidence to add more to our trades.
You know what's brilliant though, real quick, is that we have different styles, all three of us, but we think so much similar in the way, because we have different styles, but 98% of the time we're looking for the same directions and the same currency pairs, and I love that because again it shows like we all look at the markets in slightly different ways, but if we're coming to the same conclusion, then that adds fuel, in my opinion, to the fire. And it should inspire students, because we have short-term strategies, we have swing trading strategies, we have long-term investing strategies. Whatever your mix or whatever your style is, you should be able to take this information and say, okay, well, I want to trade this. I agree with Chris, or I agree with Gary where we're going. Figure out what type of trader you are and apply those strategies within that direction, because most of the time we're kind of speaking the same language, which I love.
Yeah, absolutely. Just a quick view here. I'm not going to take as much time, but I'm just going to go ahead and say that currently right now, things that I'm focused on is Aussie CAD, Aussie CAD bearish. We may be getting to levels where we should start taking some profits, but I want to discuss that Tyson, actually Chris's decisions on taking profits, protecting profits. What does that really mean? We're going to go into that conversation in a moment. We're looking at Aussie JPY, bearish on Aussie JPY. It looks like Aussie New Zealand dollar. I'm actually pretty aggressive on selling on Aussie New Zealand dollar. You can see the lot size is a little bit greater. We're actually doing some scalping on some smaller time frames on that. So I'm very aggressive on Aussie New Zealand dollar, trying to pick up some good quick profits on that. And then we've got Euro Pound, also bearish on Euro Pound. That's going to come to a point where we're going to start thinking about taking profits too. Euro US dollar, you can see that we've been bearish on the Euro US dollar. That's getting to a point where we've taken out the low. Profit taking is going to we're definitely going to be looking to take some profit on that. And then we've got some New Zealand CAD, quite a few positions on New Zealand CAD as well. Definitely going to be looking at that as well from the New Zealand CAD point of view. We've got some early trades taking place. That is not quite there yet. With regards to multiple entries like US dollar CAD, I really like the US dollar CAD bullish. I know that I'm in on some of my own personal accounts. I'm strong bullish on US dollar CAD, looking for a rally to about 134 on that. But overall, we've got some good positions lined up for the week that we took on last week. Things are starting to work out pretty solid this week. So very excited about the way things are going to progress this week. So coming back to a conversation around taking profits, protecting your profits, Chris, what is it that makes you decide to take profits on your positions? Because when you start trading, right, a trading plan is, this is where my stop is, this is where my take profit is, because I want to make sure I've got the proper risk-reward ratios. Because if I keep taking profits of 1-to-1, then I've got to have a very high strike rate, because if I take 1-to-1, if I don't have a high strike rate and I only got a 40% gain on that, then really what I'm looking at is losses on my trading account. So what is it that makes you decide that, hey, I'm going to take profits on a position? Is it getting to your targets, or is it getting short of your targets and you make a decision early to get out of those trades?
Yep, that's a great question. A lot of it has to do when I have a heavy conviction around a currency pair or an instrument, and I am taking a couple of trades to test and more trades, and I add to confirmation. That's what I've done with a lot of these dollar pairs. Euro dollar, I was short around 22, 2250, 2300, small tester trades. As soon as we broke that trend line, I started adding sell stop levels. And so the reason I decided to protect is I built a bigger position on confirmation. And so essentially those build-up positions didn't have much risk on them because direction was going my way. So as soon as I threw trades in, it was really just, adding some profits and kind of injecting more profits into my position size. I still have an overall short position running on the euro dollar. But what I've done is, instead of having 5 or 6 trades running short and having a decent amount of profit, what I'm doing, I'm just going to scale back a little bit, close out some partial trades, and then look to reload and get back in and kind of rebuild my position back up. So I essentially, I like the confirmation, so I step on the gas, I add a few more trades to it, and then I go back into like cruise mode where I take off some profits and I'm looking to reload and stay back in until my overall profit level is achieved, or until my targets, support resistance levels, bull and bear scoring points, until those levels are achieved. Then I close out the whole position. But for the most part, I just kind of test, work an area, add to my confirmations, and to me that's helped a lot, where my winners end up being a lot bigger than any losers, because I'm generally stepping on the gas, being more aggressive when I'm right, as opposed to doubling down and leveling in and trying to kind of martingale my way through trades. I've kind of reversed that, where now I'm really only looking to add on better trades and confirmation.
Tyson, what is your view on what do you do? Do you hold? Do you stick your plan from the start and say, hey, this is where my entry is, this is where I'm just going to go ahead and chase after that target, or how do you approach your trading?
Yeah, it's a little bit of a, it's kind of a, I wish I had just 100% clear cut answer to that, and I could tell you this without a shadow of a doubt in my mind. By sticking to my initial analysis and formula from the beginning, I would have multiple times more assets than I do now. So what I mean by that is I have a tendency to overthink and overmanage trades. Euro dollar is a perfect example of this. I've got shorts in right now, and I'm looking at the current level, and I'm fully expecting a bounce back up to 2140, 2150. And so the argument I'm going through in my head is, well, and technically I think that makes a whole lot of sense. And do I take the trade off, and do I lock in some of my profits to look to sell higher? And if I do, and if we don't get that push higher, at what point do I say, oh, okay, I was wrong on the bounce, and do I get back in? So it's a little bit of a game that I have to play. There is no, in my mind, there is no perfect answer. The only perfect answer would be in my opinion, do the initial homework up front and leave the trade alone. Unless something dramatically changed within the technicals that you set up. But as long as the technical levels that you didn't think were going to break on the upside still hold, as long as we haven't went down to the technical level you thought we were going to go to, then stick the trade out. So I'll say it like this. Historically, I would be better off by just sticking to the initial plan. It's difficult for a professional trader to do that, especially somebody like me who's always in front of the charts. But if I could teach you guys one lesson, and it builds discipline too, is stick with the initial analysis. Part of the other reason is let's say I'm right, and price goes back up to that 2150 level, and then I short, and it ends up making money. That's great. It worked out this time. What that can do over long periods of time, especially for new traders, is it can build a false sense of hope. And so, again, don't overmanage, don't over leverage, don't overthink these trades, especially after you've put a lot of thought in initially. Would be my advice.
Yeah. Okay. The reason why I'm asking is because my concept on trading is, set your turning points where you want to go ahead and start selling or buying, and then set up targets, and then from that point where you're starting to trade long or short, you'll then go into apply certain strategies. Now, certain strategies have risk-reward ratios, and you want to stay with consistent risk-reward ratios, because in order to be consistent in your returns, you've got to be consistent in the way you manage your risk. So when you go ahead and you say, all right, this is my target, you should have strict risk management rules initially, saying, hey, this is what I'm risking and this is what I'm gaining. If you don't have that, then what you can always be doing is you're always going to always be short of what your actual target's going to be, because you're always adjusting your risk throughout that trading position. So what I do is I make sure that, hey, listen here, when I'm committed to a position, when the market turns at a certain top or bottom, and I'm committed in that position, I'm making sure that every single trade that I take has the exact same risk on each and every single trade. So by the time I take profit on that position, and again, I may take profit early before my initial target. So my target may be, let's say, 500 pips up. But that's to say that's where I'm looking for the price to go to. It's not to say that's where I'm going to take my profit, but this is where I'm expecting price to go. So that if I do take profit with inside that move, then I'll look for the next entry point to get back in again. But when I get back in again, I now still know where my initial target is going to be, and I'm still using the same equity management, the same strict money management rules from the start. Because again, if I adjust my risk on the first initial trades to the second initial trade, then I'm not going to be consistent on my overall profits when the market actually goes to my target. So you've got to stay consistent. So I'm going to say, both of you guys, obviously you've developed certain styles that you like adjusting to, but for a new trader that comes in, a new trader that's really trying to learn about trading and understand how to be able to properly manage their risk, because ultimately the way you manage your risk of your portfolio is ultimately what's going to prove to you that you can be successful in trading. And I'll tell you why. Because if you can manage the risk properly, and just like Tyson says, don't over leverage, don't over trade. If you can manage the risk properly and making sure that you apply the right risk on each trade, you're going to be able to control your emotions. You're going to be able to be more consistent because you're consistent with your equity management. So your results, and I've heard it many times before. A lot of students have said to me, Gary, there's one thing that I cannot do consistently, and that's make profit every single month consistently. One month I'm up, the next month I take everything back and I'm losing, and now I'm down. Everything I made, I've lost, and plus some. And they constantly go through this roller coaster ride. And the reason why they're going through this roller coaster ride is because they're not working out their trades based on risk percentages. They're actually just saying, well, this time I'm going to go with one lot. Next time I'm going to go with 3 lots. I'm going to add 4 trades to this, where before I added 2 trades. Now I'm adding 4 trades, and they've mixed up the risk on each position. When you're doing that type of stuff, you're actually just you're chasing after pips instead of chasing after profits. All right? And when I say profits, I mean percentage of your profits. Oh, sorry, percentage of your account. You have to absolutely, from the day one, know exactly what your risk is going to be on each and every single trade, know exactly what you're targeting, and do this consistently every single time. And that's going to help you to start building up your account in a consistent manner from a profit potential. Now, obviously, the strategy is important too. You've got to be consistent with the strategy too. And that's why both Tyson, myself, Chris, and all of our instructors, we are so focused in on building automation and using that automation to be able to help us to be consistent in our trading. Automation, I'm going to say this from the beginning, automation doesn't make you successful in trading. Automation helps you to become consistent in your trading. And it's how you apply it, which we teach you inside our trading rooms. Chris has got his trading room. My trading room is available as well. Tyson's got his. And what we teach you inside the trading rooms is how to be able to take these automation and how to apply it to your trading, that it can help you to become consistent in your trading. Not profitable, but consistent. And then how you apply it to your trading will help you to become more profitable in your trading. So there's definitely a miscommunication or misrepresentation of exactly what EA is really and automation is really there for. A lot of people think that, hey, if I get automation, I'm going to be successful. The answer to that is no. It's how you apply it to your trading will help you become a better trader and make more money or be more successful. So those are the type of things that we're focusing in our trading rooms. Guys, please make sure that if you're not in our trading rooms, get you get your account rep, have a conversation with them, get into the trading rooms. You're absolutely going to learn about how to be able to apply automation with your technicals. We like to call that a hybrid trading approach to trading, and that is absolutely going to help you become a better trader. Now, obviously, there's a lot more things than just automation and technicals. You need to be able to be committed, to be able to put the time in, be able to get the education around that. That obviously is going to lead up to how you're going to end up being as a trader. But definitely learn how to use automation. Don't just say automation is going to make you profitable, because it will not be. And if anyone tells you automation will make you profitable, they're lying to you. It's an absolute lie. Automation does not make you profitable. All right, it helps you to become a better trader, and more consistent trader. All right. So I just thought I'd go ahead and clear it up, because I did get a lot of comments, or not comments, but a lot of feedback from a lot of students that did think that automation was the holy grail, and automation is not the holy grail. We do promote a lot more about using automation, because we know that automation is going to help you become consistent, and that is one of the factors that you need in order to be a successful trader. Is you need to be consistent. And so all we're trying to do is help you become more consistent at what you're doing with equity management, with entering a trade, following a strategy. All of those things are important to be consistent in order to be a profitable trader. All right. So anyway, trader guys, I'm going to give Tyson. I spoke a lot there. I do apologize. Let's go ahead and put it back over to Chris and Tyson. Do you want to give your final words, Chris? I'm going to say 30 seconds, because I know that'll be 3 minutes. But no, I'm just kidding, buddy. Listen, your information, the knowledge that you pass on is valuable to the students. Go ahead and give your final thoughts for the session.
Yeah, look, for this week, I expect there to be a decent amount of volatility. Like I told Jamie in the comment section, I'll be watching the currency strength chart, and any type of widgets you have in Smart Trader, anything that gives you the day-to-day currency strength movement. I'm looking to see where we have higher volatility. In stocks, I'll watch the major indices. I'll watch the SPY, the DIA, the QQQ. I'm watching the VIX. Do we have a risk-on, risk-off tone for the week? I'm not sure. We had some choppy movement last week, but again, it's like this is a big deal. It's kind of turning a new corner. If we see an aggressive agenda coming out with President-elect Biden and his team and administration, then it's going to be interesting to see how the market behaves. I think a lot of optimism again is being priced in, but I'm just, again, take it one step at a time. Like I said, a lot of my positions this week, I've been closing up early. I know we have the inauguration. We have 3 rate decisions this week. We have a lot of news on the table. Therefore, expecting to see some good volatility. So look forward to being with everybody in the trading room. Have a busy week. Have a great week. Protect some profits. And as always, just keep finding good trades.
Tyson?
Yeah, I agree with everything that Chris said and everything you said, Gary. And then I talked about a put last week. I bought the 379 February SPY put. Cost me about $10, $10.40. It's now trading at $11.79, and I think it's got quite a ways to go. So wouldn't be surprised if that doesn't inflate to $15 or $20 by this time next week.
Nice.
Awesome. That's great. All right, fantastic. And I'm going to keep it real simple, all right, just like I keep my trading simple. This week, I'm going to do no different than I do every other week. I'm going to look for the opportunities. When the opportunity is there, I'm going to use EAs and automation to be able to deploy in that direction. And if the system, the logic is lined up with what I'm seeing on the technicals, then we're going to go ahead and pick up some trades. Doing absolutely nothing. It's very simple. If the market's at support, buy at support. If the market's at resistance, sell at resistance. You use automation to be consistent with your profits, be consistent with your risk management, and of course, be consistent with your strategy. That's my 2 cents on this week. No different to any other week. Guys, we'll see you next week. Thank you for your time. Appreciate everyone. Make sure you get into our trading rooms. Tyson, Chris, and myself are going to be hitting it hard this week, talking about what's going on. Make sure you guys are there, and we'll see you next week in the AAA session. Thank you very much. Have a great week.